Africa Business News, proudly sponsored by EY.
Africa, it is huge, it is diverse, and its business landscape fascinating and dynamic. And that's our business here on your favorite weekly African business stop. In Nairobi, Boni Tunya joins us from East Africa. On his Sunday, keeps an eye on West Africa for us out of Lagos. And with me in Johannesburg is Christine Mundo. My name is Victor Homoeswana, and this is the Africa Business News. Boni, big events happening in Ethiopia and Kenya to advance regional integration, among other things. However, two stories that are very relevant on which I would like an update are the Safaricom saga and the Uchumi expansion plans, or not. In fact, let us start with Uchumi, the pride of Kenya. How have all those lofty plans of regional expansion faltered?
Well, I mean, Uchumi could be losing that tag, the pride of Kenya, in pretty fast, Victor, because the retail chain will be relooking at the Tanzania and the Ugandan markets, which may result in a closure of some of the stores. But however, it will not exit the market just yet, as they believe in the opportunities available, as well as its brand offering in the region. And worth noting, Victor, is that Uchumi's board said that the firm had finalized a 500 million shilling loan arrangement from the Kenya Commercial Bank to pay outstanding supplier debts that it has accrued over the years. Now, the board also admitted that the retail chain was still experiencing supply challenges, citing that insiders had been supplying Uchumi and not giving value deals, and as such, all staff with relations to any suppliers will be required to declare their relationship before they can get a tender for supply. Also, they also note that to finalize the payments of the suppliers, the company plans to sell off 20 acres of land in a place called Kasarani in Nairobi that is valued at 2.2 billion shillings.
Sounds like a takeover target for someone. M-Pesa, though, yet again, as we spoke last week, continues to hog the limelight, but because of the wrong reasons. This time, CEO Bobby Collymore not so impressed with the proposed regulations, which are intended to promote competition, but he believes they are likely more to reverse the gains made by Kenya in this mobile money terrain.
Well, Victor, the story of Safaricom is not going away anytime soon, isn't it? I mean, the conversations about dominance have dominated our media space, and Safaricom's chief executive, Bob Collymore, says that the proposed tariff regulations and the fair competition rules, they go against international best practice on fair competition and equality, and simply put, he's saying they are punishing success. Now, under the new regulations, the criterion for determining a license as dominant has been lowered to over 50%, which has effectively placed Safaricom as dominant in most of the key product categories, subjecting the firm to specific rules. Now, Collymore says that Safaricom's dominance in key segments of the telecommunications sector has indeed been earned through prudent management practices and was not awarded to them. Now, the deep customer insights and massive investment infrastructure are some of the things that Bob Collymore says that have grown the subscriber market share to up to 67% for Safaricom.
Well, Africa is trying to reinvent itself, and of course that presupposes reflection and a lot of workshops, conferences and summits. There's one big summit taking place in Ethiopia at the moment. What is coming out of that so far, Bonnie?
Well, Victor, the conversation in Ethiopia is about how do we fund these SDGs, and the world is meeting in Ethiopia's capital, Addis, from Monday going through to Wednesday. And Financing Summit represented a crucial point for the United Nations to end global poverty and manage climate change by 2030, Victor. And the objective of this particular 5 days of conversation on this third summit, and which is one of its kind, is laying out the ground rules for fairer, world inclusive, low carbon growth. And these are some of the descriptive words they're using for what, but basically, simply put, they're looking at finding ways to fund the SDGs. They're talking about a tune of $4 trillion, looking at how exactly will this happen. Traditional donors have suffering their own sort of challenges. They have to tug between their national budgets and a slowdown in the growth of the economy in Europe. So obviously there's a conversation about where do we look for this money now, but also there's a conversation about we have new emerging markets. What is their role going forward? Those are some of the things that will be coming out of Addis this week, Victor.
Asante sana Bonitunya, coming to us from Nairobi in Kenya. Next up is Christine Mundo as we cast the gaze on Southern Africa. We're still on Africa Business News, and in our Johannesburg studio, I'm with Christine Mundo. Christine, Philippe Nyusi, the president of Mozambique, newly elected, trying to find his feet, and one thing he's been trying to do is to reassure investors that Mozambique is the place to go. And of course, he's got a good story to tell in a way, but it looks like some coal miners are not buying his story yet. They are leaving the northern provinces of Mozambique. Who's leaving this time?
All right, so it's Coal India, owned by the Indian government. Essentially, about 6 years ago, they won exploration rights in the Tete province and subsequently acquired two basins around there. And so they have since found that the coal that they were anticipating is actually not there. In fact, one of their analysts went on to say that you can't even call what is their coal, essentially. So it's one of those cases where, you know, one wonders about the due diligence processes. There's a lot of, the government at the time had told us that there was a good mix of thermal coal as well as coking coal. So essentially India could take this to generate power as well as to make steel. And they've gone in. There is
Mozambican coal being exported to India already. Was this just the bad exploration?
Well, this is a case of they got very unlucky. The section in which they got the two basins unfortunately has no coal. Okay. So if you look at the likes of Rio Tinto, they're striking it there because they're getting a lot out of there. It was one of those cases where you pay huge amounts of money, you get the license. That exploration took about 3 years, and they found that, you know, that 12% return on investment that they were anticipating, not going to get anywhere near that.
And investments can be very impatient sometimes when these things don't happen as planned. Zimbabwe used to be the prime producer and exporter of tobacco in Southern Africa and Southern Central Africa, in the entire Africa. It looks like things are going back to where they used to be, the production quotas returning to where they used to be in the past. Tell us about that.
Somewhat. So what's happened here is that already we can see that the amount of tobacco that's been sold is going above what government anticipated because of the bad weather conditions that hurt the crop. And you'll find that a lot of the producers were hit hard by this because they don't have access to irrigation services. So, I mean, they were going on for expecting about 190 million kilograms to be sold. Already they're sitting at about 183, and the season just started in March. Wow. So it's looking good on that front. China remains the biggest importer, but interestingly enough, analysts are talking about Africa being the next big thing for tobacco companies. Looking at consumption in Zimbabwe alone, about 10 million cigarettes are smoked in Zimbabwe in a single day.
Oh, hope it's not Africa's story going up in smoke. That's Christine Mundo. Thank you very much. Next up on Sunday in Lagos, cheers to us about West Africa. Oni, I usually give the Lagos team a hard time during our stock pick, saying you are too much into banks. But when I see a South African bank beginning to report growth in earnings, perhaps I should give you credit. Standard Bank IBTC, a member of the Standard Bank Group, making shareholders happy this time around.
Oh, well, that's true. It says Stanbic IBTC Holdings PLC, of course a member of Standard Bank Group, has announced its 6 months unaudited results for the period ended 30th June 2015. Now, this is coming with gross earnings, at 68.3 billion naira. Now, this is an increase of 11% over the 61.7 billion naira recorded in the comparable period of last year. Now, according to the result, which was presented at the Nigerian Stock Exchange in Lagos at the weekend, its profit before tax during the period stood at 9.5 billion naira, while profit after tax was at about 9.6 billion naira. Now, Stanbic's total assets went up 9% to 1 trillion naira from 944.5 billion in December 2014. And of course, commenting on the results, the Chief Executive Officer of Stanbic IBTC Holdings, Mrs. Shola David Bora, stated that the group is seeking to raise 20.4 billion in rights issue to support its planned growth opportunities as well as business risks and contingencies.
Well, Africa's richest man, Dangote, announcing a $150 million investment in Cameroon's cement industry. Not necessarily a massive investment by its standards, but Still a significant one nonetheless. I thought his foray into Cameroon was met with some resistance.
Exactly. Truly, that's a point there. Well, see, the president of Dangote Group, of course, Aliko Dangote, has disclosed the company's fresh investment drive towards expanding the output of its Douala plant in Cameroon from the current 1.5 million metric tons per annum to over 3 million metric tons per annum. Now, the initial investment will cost the group $150 million. That's about 30 billion naira. Now, see, during his recent visit to the country, Dangote met with the Prime Minister, Philemon Yang, the Minister of Industry, Mines and Technology Development, Emmanuel Bonde, and the Minister of Trade, Luke Maglore. And he added that the company was already in the process of signing a contract for the construction of an additional cement production line in anticipation of a growing demand for cement occasioned by massive investment in infrastructure.
Finally, it sounds like a good news oil story. This one, Seplat communicating its intentions to make some acquisition. Any hint as to who or what the company has inside?
Well, yes, this is Seplat Petroleum Development Company PLC has said it has recommenced negotiations to acquire an asset in Nigeria. Now, this is a deal in which it had previously faced delays. The Nigerian-focused oil and gas company, of course, has reached an agreement to release the funds from an escrow account, which was set up with a consortium of banks to make a potential acquisition. Now, according to Seplat, the escrow account was originally set up with a consortium in order to look for opportunities to buy assets from oil and gas companies operating in the region. Now, under that agreement, Seplat has agreed to release $408 million of the total $453 million held in the escrow account. Now, earlier this year, Seplat was also in talks with Afren PLC, the embattled Nigerian-focused oil and gas company, over a potential takeover offer.
Well, Onyi, stay with us as we usher in this week's trivia, and we also get to hear about your and Bonnie's favorite stocks. Stay with Africa Business News. Well, Bonnie and Onyi, tell me, if I have $10,000 that I would like to invest in your part of the world, which share would you recommend I buy and why? Go first, Bonnie Tunya.
Well, Victor, in East Africa, definitely manufacturing sector. To be specific, East African Portland Cement. There has been a steady growth in the construction industry in this market, rapid growth, a lot of government investment. They're currently doing a share price of 64 flat, moving up just about 6.7% for the week. That is a good place to put your money.
Okay, how about you, Onyi Sunday in Lagos?
Well, I could suggest you stay with the banks and actually pick Zenith Bank this time. I mean, it has a listing of strong earnings. It's a market leader and, of course, pays very good dividends.
Okay, a bank out of West Africa and manufacturing in East Africa. July 14th is Bastille Day in France. Considering how many African countries speak French, it's important we have to observe this one. But as we approach the end of the holy month of Ramadan, we wish all the Muslim people of Africa, 44% of the continent's population, I must add, a happy Laylatul Qadr. I'm told this is about the holiest night in the Muslim calendar because it is on this day that the Quran was revealed to Prophet Muhammad. We're back with you next week with more Africa Business News. We thank Onyi Sunday out of Lagos, Bonnie Tunya in Nairobi, and earlier on Christine Mundo here in Johannesburg. Stay tuned to Africa, CNBC Africa. Until next week, au revoir.